Ladies and gentlemen, good day and welcome to the Asahi Songwon Colors Limited Q2 and H1FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sayam Pokharna from TIL Advisors. Thank you, and over to you, sir.
Good evening, ladies and gentlemen. Welcome, everyone, and thank you for joining this Q2 and H1FY25 earnings conference call of Asahi Songwon Colors Limited. The results and investor updates have been emailed to you and are also updated on the stock exchange and on the company website. In case anyone does not have a copy, please do write to us and we will be happy to send it over to you. To take us through today's results for the quarter and half year and answer your questions, we have with us from the management team Mr. Gokul Jayakrishna, Joint Managing Director and CEO, Mr. Arjun Jayakrishna, Executive Director, Mr. Mitesh Patel, Executive Director, Mr. Prateek Shah, Chief Financial Officer, and Mr. Saji Joseph, Company Secretary and Compliance Officer. We'll be starting with a brief overview on the quarter from Mr. Jayakrishna, which will be followed by the Q&A session. I would like to remind you all that anything and everything that is said on this call reflecting any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the risks and uncertainties that we face. These uncertainties and risks are included but not limited to what has been mentioned in our annual reports. With this, I would now like to hand over the call to Mr. Jayakrishna. Over to you, sir.
Good afternoon, everyone. I thank you all for attending this call. Wishing you all a very happy Diwali and a warm Saal Mubarak. A very warm welcome from the entire Asahi team. I am very happy to share with you the Q2 and H1 performance numbers for Asahi Group and briefly some idea on the business outlook going forward. Also, I will add a couple of challenges that we face that we need to take care of to take the company to new heights, after which we will open the floor for questions. On the consolidated basis, Q2 revenues stood at 143 crores, a growth of 6% Q-on-Q. EBITDA stood at 14.51 crores, which was flat compared to the previous quarter, and EBITDA margins on a consolidated basis was 10.2%. Consolidated numbers on H1 basis, revenue stood at 278 crores, a growth of 40% year-on-year, with an EBITDA of 29 crores, a growth of 391% year-on-year. PAT stood at 7.7 crores, a growth of 229% year-on-year, excluding exceptional items. Please note that this in our history is the record best ever quarter on revenue and EBITDA basis. We hope to continue and build upon this performance. A few words on working capital. Our working capital turn at the quarter stood at 3.36 turns. This compared favorably to 2.84 turns for March 24. Our cash conversion stood at 86 days, which also compared favorably as compared to 109 days on a group basis for March 24. Now, I will put forward a few developments that we have had during the last 6 months. Asahi Blue Division has done quite well despite a still very, very tough demand environment. We have been able to improve gross and EBITDA margins. As a leader in this segment, globally, we have been an outlier and done much better compared to others, especially the unorganized sector, which continues to suffer. At ATC, our utilization levels continue to inch up month on month, every month since the last 3 to 6 months. However, it is below our satisfaction, and we need to ramp up the utilization, growth, and revenues in this area. We have embarked upon a small debottlenecking exercise with a capex of 10 crores, which should be completed by March or April of 25. This 10 crore capex should increase our pigment capacity by 720 tons per year. This should add a revenue of 30 to 35 crores per year on the top line. For ATC and the pigment business, a last line, we hope to see improved demand from what was absolutely a terrible last year, year and a half from Europe, since now President Trump will be back in office early next year. With that, we probably may see an end to the Ukraine-Russia war and improved business from Europe. On Atlas, the pharma business, the API business, our new intermediate plant is running well. In this quarter, as anticipated in the earlier call, we are now completely self-sufficient for the backward integration stage 1 and stage 2 for our main API product. This gives us satisfaction. Now, a few lines on the business prospects and challenges. We have to continue to improve our ATC revenues by going into new markets and new customers, and ramp up revenues and capacity faster than we have been able to do in the past. At Atlas, our main challenge will be over the next 12 months to get a decent utilization from our new API facility in Chhatral. The future for Asahi Group looks solid. The team is very excited as we come to the end of a capex cycle of the last 3 years and start the deleveraging process. The capex we have done are starting to deliver top-line growth and will continue to do this for the year 25-26 and year 26-27. We hope to start improving on our bottom lines as well as we enter 2025. With this, we open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shreya Jain from Niveshaay. Please go ahead.
Hello, sir. Thank you for the opportunity. So my first question is around the consolidation that is taking place in the industry right now. Recently, a leading India's pigment company has acquired a global major in this industry. So what is your take on this? How will this change the competition scenario in the industry, and how does this have any direct bearing on Asahi's blue or Azo business? And so my second question is regarding are we open to such inorganic growth within the pigment industry ourselves, given our last inorganic growth transaction was directed outside pigments into APIs?
Thank you, Shreya, for your question. The first one, there is definitely quite a bit of consolidation happening in the global scale, as you referred to the large one. I touched upon the consolidation happening in my opening remarks as well, where we mentioned that the blue business, where we are global leaders, we have been like an outlier in terms of performance because the demand environment remains very benign and actually very bad, and yet we have been able to do good business. This reflects also on some of the other major large companies in the sector And the unorganized, this business consolidation is happening at the cost of either the unorganized sector or weaker companies. And this may probably be towards the end of the cycle, and it augurs well for the well-managed organized players. And the consolidation will also result for Asahi in various newer opportunities globally as well. Now, to take the second question, we are not at this point of time considering any inorganic growth in the pigment business. This does not mean we may not revisit that in the future, but as of today, the board is not entertaining any thoughts of inorganic growth for the pigment business as such. The pigment business environment remains quite challenging, and only very well managed good businesses are doing well, but they are doing quite well. As you can see also from our results, we have delivered better results than we had in the previous year and a half. This does not mean we are not open to inorganic growth. We could look at inorganic growth in the pharma or API segment. But nothing right now. Right now, we are focused on consolidating, deleveraging, getting utilization up, getting into new geographies and new customers, and ramp up revenues. So this will be our motto for year 2025.
Got it, sir. Sir, also, are there any updates on the pickup in the red pigment business within Azo? This really hasn't progressed as much in the last 2 years as it was expected.
For sure. I mean, I also refer to this, that we are internally not very happy with the progress we are making. We are making progress month to month, but the progress is probably slower than anticipated because of very, very poor demand environment. However, we are seeing improvement not only on the top line, but also on the gross margin front, and they should continue. About the red business, we are getting our foot well into the door now. It was a tough and challenging year and a half, and we feel that the next 6 months should be much better than the previous.
Thank you so much, sir. That helps a lot.
Thank you.
Thank you. The next question is from the line of Dhwanil Desai from Total Capital. Please go ahead.
Hi, good afternoon, sir. So my first question is on the blue business. I think, we alluded in our press release that did quite well in this business, but, one of the contributing factor was RM volatility. And in the opening remarks, you also talked about debottlenecking. So earlier we used to do around, 370 to 400 crore revenue from blue business, and we are close to that number on a quarterly basis, around 100 crore. So, how do we see growth from here on in this business? And is this number largely because of the price realization increase or the volume growth, both QOQ, YOY?
So on the blue business, about growth, I will take that question first. We may not see any really big or rapid growth because we are at about 80-85% utilization in the blue business. We have, I would like to clarify, you refer to the debottlenecking. The debottlenecking is not in the blue segment. It is in the ATC Azo business. So we are not doing any new capexes, except the maintenance required capex on an annual basis at the blue plant. So we are not adding or debottlenecking any new capacities as of now. We have 15 to 20% free capacity. But beyond that, so that is something that you could at some point factor into potential growth. But then over a period of couple of years, you could probably see, the Hindu growth rate of 3 to 5% kind of thing over there, but nothing more exciting in that area. The other question you asked was regarding?
The volume growth, YOY in the blue business.
So basically, you refer to the raw material pricing volatility. So this is part and parcel of the pigment business. It's nothing new, and we are not very concerned with it. I mean, every quarter or every 6 months, the prices are volatile. It's a built-in mechanism in the system where, any price increases are passed on, any price decreases are also passed on. So they do have impact on a quarter-to-quarter basis, but on a year-on-year basis, those impacts seem to kind of iron themselves out.
Got it. Second question is on the blue margin, sir. I think we also mentioned that, it's below our expectation or our stated goal of achieving 13 to 15%, which we had earlier indicated, and historically we have been able to do that. So how do you see the journey from where we are to that 13 to 15% range from here on, and any timelines you can give for that?
It'd be difficult to give a timeline because it's a lot is dependent on how demand comes back. However, there is a lot in our control as well, which we can do better, which we have been doing better. So our margins are actually inching up and are quite close to our to reasonable margins. We are well into the double digits on the blue business, and we hope to build upon this. And so we are kind of close to where the 13, 15 you indicated. And we should, of course, we would like to get to that 13 to 15, and that should be possible. Like I said, there could be various different triggers that could just make that happen. The demand is still bad. The debottlenecking, the destocking on a global basis has already taken place. The bottoming out of prices has taken place. So two things are out of the way. But now we need to see demand. Once demand comes back, you could easily see us going back towards the margins you referred to.
Got it, sir. One question on the API, and then I'll come back in the queue. So, sir, on the API side, as you indicated, both CMH, RCMH, the capacity has been, commercialized and stabilized. So, what is the progress in terms of moving the API production from Odhav to Chhatral site in terms of pregabalin and other products? If you can give some sense on that. And also, margins have been, a little on the lower side, and we were, saying that when fully integrated and when we scale up the production, we can go to 12-13% kind of a margin range. So how do you see again the trajectory on margin and pregabalin production from Chhatral ramping up from here on?
So we are now self-sufficient for those two raw materials for our main API. This is, of course, one barrier that we needed to cross, and crossing that has given us a good bit of comfort. The numbers in terms of margins still remain a work in process, though they have improved from the previous 4%, 5% margins. We are much better margins in the API business because of the backward integration. However, the utilization of the API capacity in the new Chhatral facility remains a challenge. And this is what, it always was going to be. It wasn't going to be an easy challenge, but that capacity utilization should start happening gradually over the next 12 to 16, 18 months. And as we do that, it will show improvement in top line as well as improvement in the EBITDA margins as well. As far as you're referring to moving the pregabalin production from Odhav to Chhatral, we are not doing this because the Odhav plant is actually operating very well. When we took over the plant, we thought that there's a small plant, it may do well, may not do well. We have a state-of-the-art new facility. But now when we run the plant, we see that what we've acquired is actually a small jewel. So we would right now not want to disturb that, and probably focus our strategy on ramping up the API facility at the Chhatral new facility with added new products. This, of course, is a new challenge, and it will take time. So it won't happen in a quarter or two, but it is work in progress, and our major strategy over the next 12 months will go in that area. And that is where, earlier the lady referred in the first question to growth in the blue business, and I said, Hindu growth rate. So the growth rate in the top line, which I referred to over the next couple of years or 1 to 3 years, should be coming out of the APC business of Azos, which continues to improve utilization and has free capacity where we have growth prospects, and also from the new plant in Tatkal for Atlas, the API segment.
One follow-up on this, on pregabalin, I think if I remember correctly, Chhatral, when we moved to Chhatral, the capacity, of pregabalin was to double, and now we are saying that probably we'll go with newer APIs. So are we, now not intending to double the production of pregabalin, company as a whole?
Good, Jonel, you brought this question. I should have probably touched upon it. So no, it is not our intention to just do new products. I mean, pregabalin increasing or, our revenues from pregabalin and improving the volumes of pregabalin by adding production of pregabalin at Chhatral is definitely a possibility. So it is going to be a combination of making pregabalin. We have, by the way, started making some pregabalin. So the API facility at Chhatral is currently utilized only 10 to 15%. And this 10-15% is coming from pregabalin. So it is not like we don't have intention to make pregabalin. What I meant is we don't have any intention to, not use the Odhav plant, which we were earlier questioning because it was a small plant. It is a nice plant. So we will continue to utilize that. We will probably make additional pregabalin and other molecules, other APIs in the Chhatral facility to utilize that facility. That's what I meant.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. So, continuing the question asked by the...
I'm sorry to interrupt you, Mr. Ankit, but can you please speak a bit louder?
Sure, I'll do that. Sir, my question was on the API segment, continuing the previous caller's question. Earlier we were planning to shift our entire pregabalin facility from Odhav to Chhatral and utilize Odhav for, manufacturing other APIs. So now we have changed our plans that we'll continue to manufacture pregabalin at Odhav, and Chhatral will be used to manufacture additional quantities of pregabalin plus new API that we are developing.
Got it. So we have, I probably need to clarify this a little better for the benefit of all of you. So we have not actually changed the plans. We just found that the Odhav plant is actually a little jewel which is doing quite well. So we would not like to disturb it. The plan, what you refer to, that we may move the APIs we manufacture at Odhav to Chhatral could still play out in the future. It is part of the strategy. So let me put it this way. So we have an option now. It is a clear strategic option whether to continue to make the same APIs that we make at Odhav in Odhav and add maybe more capacity of that in terms of volume at Chhatral and new APIs, or to move those eventually and get higher value products at Odhav. Now, see, this will depend on the kind of products that we will go into. So for your clarification, if we end up shortlisting as part of our strategy higher volume, lower value products, then we would move those APIs to Chhatral because the facility is larger. If we go in for lower volume, higher value products, which are, for example, in the range of 50,000 rupees a kilo and more, then those will certainly go to Odhav. In which case, if we get a hold of such molecules or start making that or strategize to make that, then we will have the option to move the existing APIs from Odhav to Chhatral. So this is a very nice flexibility that we now have. So it is up to the board and the management team now to consider, what kind of APIs will generate newer revenues over the next 3 years. So depending on that, we will decide which APIs will be made where. I hope this clarifies both of your questions, Dwanil's and yours as well.
Sure, sir. Sir, our API sales, despite Chhatral coming in, and like of course that is largely for our backward integration, but API sales have remained around 25-27 crore or 23-25-27 crores for the past.
Can you just repeat that question, please?
Sure. I'll do that. So our API sales for many quarters has remained around 23-27 crore. So when do you see a jump in the revenues? Maybe primarily driven by more sales of pre-gambling or the other products or the new products coming in the API segment.
I could not gather it. Arjun, can you take this? And if you can throw a little light on the earlier question about strategy as well.
Right. So I think, from our side, I think my answer will actually end up covering both questions in one shot. So in the API business, the company we took over and what we have been working on, we reported earlier that we have done some changes in, the finance side, the procurement side. We have added efficiencies from the Asahi group into Atlas, which gave us slightly better performance, a few quarters back. We are far from where we want to be. And the reason for the performance of Atlas over the last quarter or, say in the coming quarter would not be to the level where we have said we will be and we are still confident of reaching is because of the nature of that business. So to go a little bit more in depth, see, these are obviously much more certified and much more complicated products to get approvals for. And by this, I mean, whether it is certifications of several global regions, whether it is within India, pharmaceutical companies, as we target more better customers, a higher level of a customer base, whether it is in India or elsewhere as well, there's a lot of certifications that need to be done in terms of validations of new products, in terms of validations of plants, and so on. So first, to answer the last question a little bit about the moving of pregabalin, this is still a strategic discussion, but it is not something that can be done overnight in any case, because the customer base we have, even our customer base within India, the formulators where they cater to, they need regulations, they need validations of several months of the product and of the plant. So all of that is strategically coming into place, but it is not something that can play out within just a few months. It is a slightly longer and validated process that we have to follow. And as a API player, our goal and our vision is to move from just a small local player to being a more reputed, being a more certified player. Again, this is not a matter of weeks or months. It is probably a matter of years, but we are already on that track, and we are making sure that, at our new plant in Chhatral, we follow systems and we make sure, despite in the short term, maybe we don't see the numbers being as lucrative in the one quarter, but we want to make sure that we are building towards the next few years and we can put ourselves at Atlas in a position where we are a strong, reputed player that can cater to, higher regulated formulators and markets. So this will take a little bit of time. And same goes for these new products, as you mentioned. We are working quite a bit within our R&D setup, and the strategic think tank for the new products, whether it is ODAV or Chhatral, both sides. As Dad said, eventually we plan to utilize, and the goal is simple, that we have to utilize the production facility we have set up, and the validations and the processes that we are following in this new product entry is following more regulated systems, which take a little bit more time, but it will help set up over the next several quarters us in a better position and keep us better ready for the long term. I hope that gave a little bit of light on the timeline and why it is taking a little bit more time for new products as well to kick in, because of the validations and procedure we are following at Atlas.
So when do you see the revenues, revenues growing in the segment and our margins, touching our aspirational levels of, low teens?
So
it is very tough to give an exact timeline on it. So I can comment for sure that the margins, margins should definitely kick in faster, as our CEO said. We are already self-sufficient. In the next quarter, we would be, the whole quarter, should be self-sufficient for our main API. So that should help with margins. But then, as I said, as we move for more accreditations, as we try to be more systematic, we have to make sure that our procedures and our systems are following those levels, and that is the only way we'll be able to cater to the more qualified and higher regulated customers. So, while I can say that over the next 2 or 3 quarters, we would be able to show better margins. It is not not something that we will be able to show immediately, and not a jump that one can expect for directly to come to the number that we have given. It is more of a gradual thing, and probably we should be reaching better EBITDA margins and a higher turnover, not for the next two quarters, but probably following that.
Sure.
I entirely agree with what Arjun said. So precisely what he meant is, after 2 quarters, we would start seeing improvement in revenues coming out of new APIs, hopefully by the first quarter of the next financial year. That is starting 1st April 25.
But the pre-gambling demand for the customers or the markets that we serve remains a bit challenging, is what you are indicating.
No, the pre-gambling demand right now, what we are making, we are selling. That is how our revenues are not falling or anything.
Sure. But the demand is also not growing there, and the prices are also under a bit of pressure.
Demand is growing. Pre-gambling demand is estimated to grow about 7% over the next 5 years. Prices continue to be under pressure. So that we will see. Now with China +1 also, how it plays out now that Trump is in office, will also put an interesting aspect to it. But demand for pre-gambling will probably do decently well, 5 to 8% over the next 5 years compounded. But the prices, you are absolutely right. Last quarter we had decent pricing. This quarter pricing is under pressure. It doesn't always augur badly. Like you saw in the pigment business, we had a very, very challenging 1 year because we were below cost and very, very tough time. But then the industry, as I think, or somebody earlier than you referred to, went into consolidation, and a lot of people kind of got into trouble. So consolidation or price pressure just makes you a little more efficient. So we have to embrace it in the meantime.
Thank you. The next question is from the line of Proflin Bharat Nandu from Edelweiss. Please go ahead.
Yeah, hi team. Thank you for taking my question. I'll start with API because last 2 questions were also more focused on API. So just to understand it correctly, while you mentioned that the margins have improved, but if I look at your reported numbers, quarter on quarter they are down, right? For that matter, year on year also they are down, right? In API, when I look at the segmental results, so are we both referring to the same numbers when you said that margins have improved in API?
I meant the half year.
Okay, all right. Okay.
Yeah, that's why. But you're right. Otherwise it's been flattish.
Right.
For a quarter it's better, then again a quarter it's challenging. I refer to the half year because I was talking to the
all right. All right. So the larger and the more strategic question is this, right? That in API, we got into it. This was a completely new segment for us. We did not have any experience as such in this segment. We must have done our own industry demand supply analysis to get into this segment. And the time that you referred to in getting approval, is it something which is which we have to endure because of our lack of experience in this segment, or that's how the segment works, right? It takes time to get approval. What I'm trying to understand is that had a company, Atlas, being held by the old promoters or being acquired by somebody who would have an experience within the pharma space, would the time to go to the market with the new products would it have been shorter, or would it be taking a similar time as to what it is taking for us?
That is tough to answer, but this I can say that, our lack of experience in the pharma business is not an excuse and should not be an excuse to, take longer. So I would not expect my team to take longer than what it would take anybody else. I mean, definitely we should be doing it better and faster than the previous promoters. That's why we took over the company, and that's why they sold it. But, we have to ramp up our strategy and team to an extent where we are able to handle that compliances at par with any other pharma player. So when we budget the time it would take, it would be the same as anybody else. Having said that, like you said, that and Arjun referred to earlier, that in this pharma API space, there is a time lag that happens. I mean, accreditations, whether it's European or other countries, they have a certain time that it would take, because you have to do stability runs, you have to do various formalities, procedures, which we have to adhere to and comply to. So that time it should take, but it should not be any more than what it should take anybody else in the industry.
Fair point. But Gokul, all these things we would have already accounted for when we acquired, right? Because we were aware into what we get. So again, maybe some strategic insight from you as to is there somebody, some sector expert who is leading the team, helping us understand the nuances of the business? Can you shed some light on the manpower or the executives who are probably handling this business and helping us in terms of compliance, getting the European approval, US approval, so on and so forth?
Yeah. So we have a what we inherited from the previous management was a very well-knit and well-run team to be able to run that operations as it was. Now we have gone in for a greenfield operation, which is far larger, and with, like Arjun referred to, we have expanded in our mind the horizon of the business that we want to do. So the challenges are new. Strategically, I think Arjun has already roped in, along with his team in R&D, consultant who is working on strategy in terms of honing down on specific products. So this should take about 6 months to pick out specific products. On the HR side, I don't want to talk right now too much, but in the next call, I would be able to definitely tell you that we would be having one senior appointment, which is very close to happening, and likely two. And these would take care of what you are saying in terms of our capabilities to, to adhere to the compliances and the ramping up of the facility.
Sure. So what I understand is that when you talk about new product apart from Paragabin, which was our core product, what Atlas was into, that is even deciding on which product to get into is a 6-month journey, right? I mean, only then we will decide as to which product we will get into. Is that a fair way to think about it?
So I like you can maybe it happens in 1 month. We don't know. I mean, it is so I'm saying it should take. I mean, even if we were to identify a product in 1 month, it's not going to generate revenues in 1 month.
Yeah, correct.
So the identification process. We have given ourselves now until 6 months to identify products. Now it could happen anywhere during the period. It depends on the kind of products, the accessibility of the technology. There are also products that our team is working on we have an independent R&D center as well at Odor, which is away from the plant. And we are in the process of, developing new molecules there as well. We have already developed two molecules and launched them, and 2 new are underway. But these are, not going to have a major revenue or EBITDA impact in the coming financial year, even forget about a quarter or 2. So I didn't refer to them. But what we are now looking for is strategically to get a higher volume product or 2 products, which can help us ramp up utilization of the API facility faster.
Sure, understood. And when we talk about backward integration in the N-1, N-2, and we are self-sufficient there, but we also had plans to sell that N-1, N-2 in the market, because in the interim, by the time we have full utilization of our end API facility, we would have excess capacity of N-1, N-2, if I'm not wrong. So where are we there in terms of selling it to the outside market?
So we have not yet made any very serious efforts or inroads into doing that, and we don't intend to do it at least for the next quarter, because our efforts will go into selling more pre-gabalin. So because if you start selling, take the easier route and reach out to other makers of pre-gabalin with these backward integrated products, you cannot do that and then stop in a few months because you have more demand for pre-gabalin. So we are playing a little cautious role there, rather than just sell, a little more, get a little more revenue out of sales of those products to outside players. We are playing a little longer term strategy where we want to reach out to newer customers in the pre-gabalin business itself, whereby then we will need that backward integration for our own pre-gabalin. So we haven't made any serious efforts to sell those products outside. And like I said, that we are, even if we were to do that, we are at a stage where we are just self-sufficient. So this will be the first, quarter that we will be fully self-sufficient. So we are just coming to that stage. So the question of selling that outside has not yet arisen in this quarter or in the next quarter.
Thank you. The next question is from the line of Rupesh Tatia from Intelsense Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, very clear.
Yeah. Sir, my first question, I have questions on all three segments. My first question, sir, is on Azo. So in Azo, what is the capacity utilization of yellow and red separately? And when are we likely to, hit, let's say, 25 crore quarterly revenue in the Azo business?
What was the last? When are we likely to hit?
25 crore quarterly revenue run rate in Azo business.
Yeah. So Arjun, you want to take this? Then I'll finish it.
Yeah. So I'll take the utilization and those numbers that you asked. So we, we would just for competition in general market, we would refrain from giving too much product-wise or color-wise information about utilization. What we can say is, and what was highlighted in the first question as well, the yellow line we have reported has done well, over the last few quarters, and we have seen the utilization for that line go up. For the red line as well, if you see Q on Q, we are improving every single quarter, and we are making sure this last half year has been better than substantially better than the half year before. And we can say, as opposed to before, that we are seeing a higher utilization now in the red line as well. It is not where we needed to be, but we are hopeful that in the coming quarters we are now at a position where we will really be pushing that and pushing it fast within the next 2 quarters. So utilization of both red and yellow should now both should proportionally go up in the coming quarters, and the marginal improvement that we have seen over the last 3 quarters will certainly continue in this quarter as well.
Our overall capacity utilization for the Azo business stands at about 66%, 65%.
Okay. So 25 crore quarterly run rate. When can we reach there?
I think we should be able to reach that in the first quarter of the next financial.
Okay. And sir, how is the uptake from the TTC account? Because I think we have some guaranteed uptake from the tenants. So how is the situation there?
So it is not as much as we expected, but it is decent. I mean, so they are buying products that they need. Unfortunately, what happened over the last 1.5 years, one, the global demand itself and the pigment industry, you all know, went through a terrible time. And Europe was the worst hit with this Ukraine-Russia war. So, you can't blame them for not because their own demand kind of, crashed substantially. So let's see, I think it's bottomed out. We are seeing improvement. and we should be. So, to be specific, we haven't been able to sell to TTC what we had targeted to. However, this quarter there is improvement. Last quarter was very poor, in fact, and this quarter there is some improvement, and we are hoping that over the next few quarters it will continue to improve. And Europe also, like I said earlier, with Trump coming back to office, you may see the war in Ukraine get over and Europe start doing much better in 25. If that happens, then we could be at normal with TTC, what we had envisaged.
Okay, sir. Sir, and then in API business, what is the top line needed to go to, let's say, 13-14% margin? Can we do that at 150 crore? Because there will be fixed costs and other things, right? Yeah. Sorry?
You meant at 150 crores turnover?
Yeah, at 150 crore turnover, can we hit 13-14% margins?
Yes, absolutely, yes. That is our internal target, that we reach a turnover of 150 crores and we hit 13-14% margin EBITDA.
And we can achieve that next year, FY26?
See, I've been wrong earlier with the ATC numbers because of the market and other situations. So I'm a little reluctant to put a timeline on it. But yes, internally that is for sure our goal. That next year we should be, by end of the financial year, we should be at a full year of 150 crores and close to 13 crores of EBITDA.
Okay. And sir, now that pregabalin at Odhav will continue, I think that was one of our major operational targets when we started the year. So now that pregabalin will continue at Odhav, so where are we on, commercializing non-pregabalin from Chatral, and then we also have a unit for high pressure, high value APIs or intermediates. So that plan now should get accelerated, right?
Absolutely. So I mentioned that the biggest challenge going forward and the highest opportunity comes from here. I said it even in the opening, the two challenges: one, ramping up faster on the ATC azo pigment capacity utilization and revenue is one, and the second and the biggest would be from utilization of the API facility at the new plant in Chatral to strategically introduce new products, to strengthen the team at senior level and ramp up capacity of the API unit there. Not ramp up as in utilize, We already have a capacity now.
Thank you. The next question is from the line of Tanish Mehta from iThought. Please go ahead.
Am I audible? Hello?
Hello.
Yeah, hi sir, am I audible?
Yes, Tanish. Yeah, go ahead.
Yeah. So my first question was with regards to the blue segment. So if you could just mention what is your revenue potential from the existing capacity, and I think you had mentioned that you don't have any plans for expansion in the segment, right?
Yes, that's correct.
So what is the revenue potential from the existing capacity?
So about, it depends a bit on the pricing as well, but anywhere between 350 to 425 crores from the blue segment.
Okay. My second question was from the API segment. So I think you had mentioned that we are looking to do...
On this question, we have reported on a standalone half-year basis, I think 192 crores.
Okay.
Yeah.
Right.
Carry on.
Yeah. Thank you. So the second question was from the API segment. So I think you had mentioned earlier that you are looking to do a 200 crore API in FY 2026. And I think in H1 we have done 52 crores. So by next year, do you expect to double this number?
You were not audible. Can you repeat it, please?
Yeah. So I think we had mentioned that we plan to do 200 crores in API in FY 26.
I couldn't hear that figure. I don't know what you're saying, what the number.
Just a second.
You said what have we
Am
said?
I audible now?
Yes.
Yeah. So I think we have mentioned that in the API segment, we plan to achieve 200 crores in top line in FY 26. And in H1 of FY 25, I think we had 52 crores in top line. So do we expect to double this number in the next financial year?
See, it's going to be a challenge, but that is the aim. We would like to. And like Arjun had referred earlier, if we get our strategy right and play our cards properly, we should probably be able to do that.
And if you could just mention a little bit about what would be your growth strategy.
We have the capacity, we have the opportunity. Now we have to work towards it. But yes, for 25-26, that is a real possibility.
Okay. And if you could just mention a little bit about what would be your growth strategy for the same? Like
for the API, Arjun?
Yeah, for the API.
Yeah. I think, this will come back to the earlier question. I mean, it's difficult to give an exact timeline or an exact growth plan. But in general, I think, what we are doing as a company and what we want to achieve over the next, say, 2 years is to be known for a more, accredited, validated type of plants. This will allow us to not only increase our volumes in the product we are strong in, which is pregabalin, by catering to the more accredited markets, which would in turn help us with better numbers, better bottom line, as well as in new products where we would be able to cater to customers that require a certain level of system, certain level of validation. We are well on our way to achieving those systems and those validations. While they take time and it is a cumbersome process, as our CEO said, we are working towards it. We are working with the internal team. We have some consultants that are helping get our plant and our systems in line as well. We are doing several internal audits. We are doing several processes inside which are making sure that our core is getting stronger, and hence as we move to new products, as we move to new markets and segments for even pregabalin, we will be well set, because in this API business, for all players, us as well as everyone else, having a very strong core and having very strong data integrity is at the crux of the whole business, and that is what we are establishing, and we want to make sure we are known for that, and we are known to be that kind of player. So, I cannot give an exact strategy, but this is largely what we plan to do. This is what we plan to follow, and we will be using internal as well as outside consultants, and we will be using all the resources we have to push Atlas in this direction. So over the next 2 years, we are able to achieve, the plan that we have laid out, as well as, hopefully the numbers that we are hoping to get over the next 2 years.
Okay, great. Thanks, that was helpful. Also, if you could just mention what are your top 3 drugs and their contribution to API revenues, if you could give us the same.
The top 3
products in the API segment, and what is their contribution to the revenue?
So one is pregabalin, which is more than half of the revenue of the API business. Second is levosulfide. Arjun, can you tell the other 2?
Yeah. So, as you mentioned, we probably refrain from giving exact numbers, but pregabalin is our largest, as you said, more than half. We also have levosulfide, which is our second biggest, and then we have a mix of 5 others, which are all not very large, but all are contributing in their own small way,
which is about 25%.
Thank you. The next question is from the line of Ishit Desai from Forge. Please go ahead.
Yeah, thank you for the opportunity, sir, and congratulations on good set of numbers. Am I audible?
Yes, Arshad. Yeah, absolutely. Go ahead.
Yeah. Yes, sir. So, sir, my first question is on the Azo business. Since our capacity, if we look at in terms of global market size, right, and the kind of relationship we have with some of these global players is still very small, right? First 1 or 2 years we had some challenges in terms of product quality and output issues. Now, given that most of that is behind us, how you in your commentary also you mentioned that you are witnessing increasing inquiries. So could you throw some color in terms of what kind of size, scale players are we interacting with, and once the demand scenario starts becoming a little normalized, do we see this ramp up much faster than what we have seen in last 1 or 2 years?
Arjun?
Yeah. So thank you for the question. Yeah. So basically, to answer backwards from the last one, yeah, we definitely should see a faster growth as the demand picks up. As we described generally, it's still even today that the global demand situation has not improved too much. We are marginally improving, but the rate of improvement in our agro business is far from where we would be happy with and far from where we want it to be. So we are working every day to help move that faster. As markets improve and hopefully the demand improves the next few quarters, we should certainly be seeing a faster rate of growth. And in terms of customers and segments here, we are working on several different opportunities for several products, and we are working with partners and channels that we will look to open over the next few quarters and help boost this growth faster than it has been for the last 2 years.
Asha, this is a good question that you'd asked. Basically, we would be, as of right now, we are doing mostly local business. Exports is very contributing not significantly. Like in the blue business, exports contributes more than half and significantly to our top line and bottom line. In this, we have not started yet. We were slow to get started, but now we have started making inroads into the same customers. So now there is tremendous customer synergy when we talk about exports between the blue business and the AZO business, which has not been leveraged yet. I hope this answers your question. So then, yeah, if we are
traction on that, any traction on that?
Yes, there is traction. The traction is slow, but if it ramps up the opportunity, there is traction on 3 accounts, actually, to be very specific. I don't want to name them because it is too early in the game, but if one of them even ramps up, it could be, helping us do that revenue numbers that we were talking earlier for the full year, the 25-26 of 150 crores, then would look very, very doable, very easily, in fact. And if we get 2 accounts cracking, which is also a question of matter of time. But if that happens, the earlier it happens, the easier it gets to ramp up revenue and the business.
Great. Thank you, sir. And my
Thanks,
second question,
yeah, good question.
My second question is on the API business. Since you are now focusing on getting newer products in the basket, I understand that you will not be able to name it, but more in terms of product mix, I mean, what kind of products are we looking at? Are we continue to look at cost leadership sort of model with, say, pregabalin, sort of very large market size molecule, or are we looking at more niche sort of high value molecule? I know as a basket you would want to cover more, but more in terms of thought process, I mean, are we looking at complex high value molecules as a larger basket, or our focus will still be on cost leadership and then we want to kind of gather more market share in some of those molecules, and some color on those aspects? And again, and at what stage are we? I mean, when we are saying that we are trying to finalize product basket, so have we kind of taken feedbacks or some of the potential? Where do we sit in terms of stage of development or stage of finalizing, crystallizing some of those products?
So, Arshad, we would be using both the strategies, and we would need to use both the strategies: the higher volume, lower margin, lower value, products to fill up capacity, and the high value, lower volume, higher margin products to get a name and a market. At current stage, we are concentrating strategically more on getting the cost efficient, lower margin, the lower value, higher volume products, so that we can fill up our capacities, utilize what strength we bring in as a management straight away, where we are cost efficient, and then we will start looking at products into the higher value chain category. And when that comes, then that ramp up earlier, a couple of questions back, somebody had referred to about odor to Chatral will crop up. And that's why we have put it on hold, because right now we are not chasing see what happens if we chase the high value products right away. They are not going to, they're going to take much longer. So it will not, even if we were to even develop one, and we have internally developed one product, dapagliflozin. So this product has been internally developed, commercially launched, but it's not going to have any impact because it's going to take a long time. It's a 25,000 rupees a kilo, 30,000 rupees a kilo product, but the volumes are nothing that I can talk to you about. So but we are not concentrating on getting more high value molecules like that, more on the high volume molecules where we build cost advantages and go into backward also where possible, which again is our natural strength.
Thank you. The next question is from the line of Hemish Shah from an individual investor. Please go ahead.
Yeah, good afternoon, sir. I just want to get a sense of, how is the business looking and, your outlook probably for the rest of the year and next year, when you compare it with the first 2 quarters of this year. How are different segments looking pricing and demand-wise?
So generally, the second half of the year, I would say, would probably look similar in terms of top and bottom line. Segment-wise, we have 4 facilities and it would probably differ segment-wise. We would clearly want to see a reasonable improvement from 2 of the 4 plants, which is both the new plants. One, the pigment plant at Dahej, the AZO plant, and the intermediate and API facility in Chhatran. So from these 2, we should see certainly improved second half as compared to the first half. However, that may not be a game-changing big thing on a half-to-half year basis, but it should definitely be better than the previous half. And we hope to maintain our position in the blue business and the odor API facilities and the numbers as well.
So even margin wise, I think the blue business should look stable. You think over the next, 6 months to 1 year?
Yes.
Okay. Thank you, sir. All the best.
Thank you very much.
Thank you. Ladies and gentlemen, this will be the last question, which is from the line of Aryan Oswal from Finterest Capital. Please go ahead.
Hello.
Good afternoon, Mr. Oswal. Yeah, go ahead.
Good afternoon, sir. So my question is on the line of tax rate. So why is the tax rate so higher, and do we have any DTA available?
Pratik bhai, can you take that?
Yeah, we do not have a significant amount of DTA available. Yes, we do have some portion of it, but that's not as high as to compensate on the overall tax rate.
Okay, sir. And sir, any comments on the tax rate, the higher tax rate?
I mean, see, the tax rate is uniform for all the entities. There is no changes in any on the entities for any of the tax rate.
Okay, thank you so much, sir.
So on the tax front, I mean, both the entities which are generating majority of the profit are both in a higher tax bracket than the newer entities. Both the new plants, the ATC AZO plant and the Chhatral plant, which are in the lower tax bracket range, but they are not yet in the PAT positive territory, and hence it may look that. So it should improve over the next few years as we get these 2 in a profit zone.
Okay, thank you so much, sir.
Thank you. Ladies and gentlemen, as that was the last question for today, I now hand the conference over to Mr. Gokul Jaikrishna for closing comments.
Thank you everyone for joining the concall this afternoon and taking your precious time out. It was wonderful interacting with you, and I hope to come back to you with the Asahi team for the next half year as well, with better numbers and better, brighter prospects. And we bring also the hope of deleveraging, consolidating, and growth. Thank you, everyone.
Thank you. Ladies and gentlemen, on behalf of Asahi Songwon Colors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.